Wisdom, the edge of stock market investing. In a recent value investing pioneer summit of CFA in Delhi, Bharat Shah, the well-known and highly respected investor, shared that wisdom is an important trait for success in investment field. However, he neither shared his constructive wisdom nor delineated the process of acquiring the same. He merely stated that it is honed, shaped and refined over a period of time. In the same conference, Sanjay Bakshi, another highly respected investment educator, shared about marshmallow experiment for value of delayed gratification or self-discipline. When I went outside after his session for tea break, I noticed another live experiment happening there. There were fried samosas, nice cookies and cut fruit laid out for snacks along with tea and coffee for participants. And the cut fruit table was empty while people were dashing merrily for samosas and cookies. These are tasty snacks and give great delight in the short term, but in long term they stay around the belly for maybe the rest of our life. I am exaggerating, but all the same have harmful effects. Just out from the conference after listening to the advantages of delayed gratification, none could really relate with this anomaly of not following the delayed gratification in the here and now. Why I am sharing this? Listening to all the great insights does not lead to change in behavior as per those insights. If it were so, the world would be a heaven. Looking at all the great wisdom we receive every day on our WhatsApp chats. Further, so much knowledge about good investing is available in great investment books. But do people become great investors by reading them? So what leads to behavioral change and acquisition of wisdom, the necessary ingredient of success in stock investment? What is the process of honing, shaping and refining of our minds in a particular profession or trade or life in general? Or specifically in investments? It is well established in behavioral science that behavior learning and change involves a cyclic process of following 4 steps, modified version of Kolb's learning cycle. 1. Experience. For instance, one invested in a particular stock for whatever reasons and then experienced the outcome of success or failure in a particular time frame. This will constitute an experience. It includes all the understanding, thinking and feeling that went with all aspects of buying, holding and selling of stock. 2. Reflection. After the above experience, one needs to reflect on what happened, whether the outcome was as predicted or variance was there. What led to variance? How one felt and dealt with all the feelings, comfortable, pleasant or unpleasant. And related questions. 3. Learnings. What does one learn from the above? For instance, one may see that the assumptions of future growth scenario were wrong, or holding period was wrong, or entry price was wrong, or decision was just impulsive on the basis of tip, and so on. Learning can be one need to build one's skill of valuing or not work on the basis of tips or be more patient or whatever. Learning usually involves churning through pain of failures. However, it can also be from success experiences, but that happens rarely. Most important element is taking responsibility for all the choices one has made in above experience and not blaming others, which is one of the ways to escape and not learn. This is one of the most important steps of behavioral change. There are lots of defense mechanisms available to humans to run away from the pain of failures. It is a topic in itself of another article, so I am not going into its details. In summary, it is as under. Steps involved in Pradeep's cycle of suffering. Painful feelings like loss from an experience. Escape by using defense mechanisms, feeling comfortable in the short term. Repeat of the same mistake as no learning. One remains stuck in the cycle of suffering, pain remains in the long term. Steps involved in Pradeep's spiral of liberation. Painful feelings like loss from an experience. Taking responsibility for the above and suffer the pain and convert the pain energy to motivate oneself for change. Initiating learning and taking corrective and preventive actions. No more same mistakes and move on further for other learnings. Not stuck, but growth happens in the long term, happiness in the long term. This is the biggest dilemma life keeps giving to all humans irrespective of age, gender, or achievements. Comfort in the short term and pain in the long term versus pain the short term and comfort in the long term. Most of us are repeatedly trapped in the first and choose short-term comfort and suffer in the long run. Same applies to businesses run by humans too. Thus, ability to suffer pain, take responsibility, motivate oneself to learn, take corrective and preventive actions alone leads to growth and greatness and long-term happiness. The point of destiny is the moment when one escapes or takes responsibility when the pain of failure or mistake occurs. 4. Experiment with application of above learnings in the new situations. One has to apply these learnings, otherwise the change is not happening. So experimenting and risk-taking to make changes in one's actions and behavior converts that learning into new experience, which may lead to more success or whatever. One starts another learning cycle with the new experience. The role of managing feelings is the most critical in all the 4 steps. That is why EQ is the first requisite of learning and change. These are the prerequisites. 1 is in touch with one's feelings. Many people are either not in touch or vaguely touch their feelings. These operate below their conscious awareness. Understand the process of change of these feelings. Ability to regulate and manage them. Take responsibility for them. Use their energy to motivate oneself for change. And many more subtle aspects like empathy and alchemy of feelings. Since people in general have low levels of EQ development due to our culture and educational system, developing EQ is a major task for acquiring wisdom through learning. The entire investment world is dominantly focusing on the cognitive aspects of behavioral manifestations like biases, etc. Even though they have feelings underlying them, no wonder people are not able to come to grips with the behavioral aspects of investing. Let me narrate an actual experience of failure of mine which is current and happening with me right now. I have 1,300 shares of Divis Lab in cash. And I have been using covered call options selling and making about 5 to 7,000 rupee per month for the last 4 or 5 months by selling higher strike price calls. This month also I sold call of 760 expiring on September 28, 2017, assuming that it will take many months before US FDA will come to inspect the plant and no trigger is going to happen in the coming month for taking the price up. Unfortunately for me the same happened and the price has gone up to 960 rupees. Now I have to shell out, 960 minus 760, multiplied by 800 is equal to 160,000 Rs, whereas all I got for selling the call option is just 15 multiplied by 800 equals 12,000 rupees. Even though it is covered call and I will recover from the profit to be made by selling the shares, still I lost out on 145,000 rupees which I would have got by selling the shares at 960. In all the previous selling of covered call I must have made about 80,000 rupees or so. I ate like chicken every month, but this month I am shitting like elephant. There is pain in this experience. I am responsible for selling the call options and paying the consequences in terms of loss, as well as now I have to sell my 800 shares of Divis Lab. What is the learning for me? Selling options, even covered ones, can lead to loss of big opportunities. Let me not mess with short-term stock movements as they are very unpredictable. Will I be able to resist greed of free money in selling options? They are the real example of short-term gain and long-term pain. I feel embarrassed in saying this, but let me share, this is the second time I am caught in this. Earlier it happened with REC, which had gone to 220 rupees when I had sold its call of 190. Somehow, I retrieved it by selling future etc. and luckily recovered in the next month. Even in that I lost the opportunity to sell high at 220 rupees because I had sold the call option of 190. In the first instance, I did not learn and did sell the call for Divis again in this month because the lure of free calls selling money, the innate desire in me to make money through short-term means, the trading mentality. Do I see how important it is to regulate one's urge to speculate, which comes from attraction of free money in the short term? Perhaps, I shall regulate myself in future and refrain from selling options in stocks? Let's see. Because regulating one's feelings is tough, but I'm hoping that this pain of loss will teach me a lesson of lifetime. Is acquiring wisdom easy? It's a long and painful journey in which value of learning and humility is supreme. No wonder very few succeed in stock investment too.